Today I'm going to be talking about raising capital on social media and a critical error that I was making. I didn't even realize it, yet by changing this one thing, I was able to generate 10 leads just in the last week. I'm also going to go behind the scenes on my strategies because some of the things I do may not make sense from the outside looking in, and I want you to get the inside track on what I'm thinking with my strategies on raising capital on social media. Hey, thanks for being here and listening to the message. I get texts, emails, and messages all the time about lives that have been impacted, people that are changing what they're doing and making forward progress. What really drives that is people liking, engaging, subscribing, commenting, and it's a really good way to pay it forward because the more we do that, the more people are going to be reached and helped. So if you're enjoying this content, if you're getting value out of it, I ask that you would just like, comment, subscribe, share it with a friend so that we can pay that forward and help more people unlock their life. Hello and welcome to Unlock Your Life. If you're listening, today is an exciting day because we have now implemented video podcast in our program. We're uploading full video content on YouTube. So if you don't follow me or subscribe on YouTube, just type in Jennings Smith, Unlock Your Life. You'll find my channel. Hit the subscribe and you can watch the video version of this every week. Today, we're going to be talking about raising capital on social media. I'm going to reveal a critical error that I was making that once I changed it, I was able to generate 10 new leads just this past week. I'm also going to talk about some of the strategies I'm using that may not make sense to the outside person looking in. I want to get into that and why I'm doing that so that you can implement this stuff in helping you raise capital for your next deal. So let's get into it. If you've followed me for any period of time, you notice that I don't always just post about raising capital for apartments or apartment deals. I'm talking about other things. I mean, some of the things that I've talked about are, mobile home parks, mobile homes being sold, owner financed. I've talked about hard money loans that I've done. I've talked about partnering with a fund in their hard money lending. I've talked about foreclosures, buying foreclosures directly from a bank and flipping them. I'm just kind of posting a lot of mishmash of stuff, but it's all real estate focused. So if you look at my portfolio, 90% of it is focused in apartment buildings. Yes, I own a storage facility. Yes, I have had mobile home parks. I don't have any currently. And yes, I do some hard money lending and flip some foreclosures, but the bulk of it is in apartments. So if you're looking from the outside, you might be thinking, Jennings, why are you talking about other deals, other things? Is this just diluting your brand? What is the purpose behind doing that and talking about that? And it's really critical because you got to think about this. Apartment deals are big deals. They take a long time to close. And once you close them, you've got to go through 3 or 4 months of just figuring out what the property's doing, then maybe another year to 2 years of stabilizing the property, and then you're refinancing or probably selling it. And so how many of those can you do a year? Well, for me personally, I do 2, 3, 4 deals a year. I have done 5 or 6 a year. That's really, really cooking. And I know some of my colleagues have done more than that, but that's where I feel comfortable is doing 2 to 4 deals a year. But I don't want to just post 2 to 4 times a year, hey, we closed the deal, or hey, we just refinanced the deal. I want to be giving people interesting and exciting content to show them that I'm winning, to show them that I'm building momentum, right? So let me talk about a couple of the things that we've been doing lately and why that is building momentum and showing people that we're doing stuff and how they can get involved. So, for example, I posted about a hard money loan I did. It was a $200,000 loan on a $325,000 house. I just put it out there, hey, we're funding this loan today. Here are the terms. Here's the money that we're making. And then I have an ask. Hey, do you want to get involved in hard money lending? Hit me up. I posted about a mobile home getting paid off. I sold this home for $25,000. I bought it for $8,000. It was owner financed with all the interest and everything. It was about $36,000 paid off over 6 or 7 years. And so what does that have to do with apartments? Not much really, but it gets people interested. Talking about doing a slow flip. I just posted on a house that I bought for $27,000. We sold it for $69,000, owner finance, and getting in monthly payments every month. And what does that have to do with apartments? Nothing. So the reason I'm doing this though is because momentum is contagious, and I want to be top of mind for people to see. Jennings knows real estate. He knows a lot of different facets about real estate, and more importantly, he knows how to make money in real estate. He's successful in real estate. Look at this, deal after deal after deal. He bought this foreclosure in Puerto Rico for $40,000 and sold it for $120,000. He bought this mobile home for $8,000 and sold it for $24,000. And then I can pepper in, hey, we're refinancing a apartment complex. Hey, we bought another deal. We bought this 280 unit in Colombia, et cetera, et cetera. And so if you're looking at this and you're thinking about this, a lot of my listener base, they're already in real estate, right? They're wholesalers, they're house flippers, they're contractors, they're realtors, whatever they're doing. They're in this space somehow or some way, or they already own some single family rentals. And that is a good way to build credibility and to build strength and build momentum and to show people how you are winning. Let's say you're thinking, Jennings, I don't have a 50 unit apartment complex that I can post about. I don't have anything exciting going on. All I've got is this duplex that I'm renting out. Well, dude, if you're renting that out and you collect $1,800 and you post a screenshot of your bank account with that $1,800 flowing in, hey, September's rent's coming in. That's great. People are going to see, wow, man, he just got $1,800 in passive income. That's awesome. I wish I could do that. I would love to get an extra $1,800 a month. Now, that's a little bit of sizzle because we know you've got mortgage and taxes, insurance, and everything else. But that's another way you could show that. My mortgage on this is $1,000 a month and we collected $1,800. Or if you're kicking a tenant out, you can show that, hey, I had to kick this tenant out. We were at $750. Now we just raised rents to $1,100 a month. This is $400 a month more in positive cash flow. If you're a flipper, we bought this house for $97,000. We put $30,000 into it. We sold it for $190,000. We made a $60,000 net profit over the course of 5 months or whatever it took you to do that. And when you're posting these wins and showing people that you're proficient, you're competent in doing this, it starts to build strength. It starts to build a reputation for yourself because more people need to know you. If you want more opportunity flowing to you, if you want more capital flowing to you, you want more investors flowing to you, you've got to show people what you're doing so they can know you. Just this week, actually just today, earlier today, I got 2 requests in for loans. One guy is buying a house out of foreclosure. He needs some help on the cash side. And this dude is in my local community and he kind of knows me through a few acquaintances, but he doesn't really know me as a real estate guy other than my social media presence. He's friends with me on Facebook. He's friends with me on Instagram. He's following what I'm doing. He's seeing, oh, okay, Jennings is doing apartments. Jennings has money. Jennings is loaning money. Maybe he could help me get this deal across the table. And so he reached out, right? And he's got a great opportunity. He's got an opportunity to make a couple $100,000. And when someone can make a couple $100,000, they don't mind paying $10,000, $15,000 in interest to make a couple $100,000, right? Another colleague is in the deal room and has a need there. And so he reached out to me and we can help him get his deal across the table, right? Because he knows what I'm doing. He knows my capabilities and I'm posting about this stuff. So you may think, well, I don't have a whole lot to go on, but it starts somewhere. It's got to start somewhere. What are you doing? If you're underwriting a deal, post about it. If you're going to look at a property and touring units, post about it. If you're making an offer, post about it, right? This refinance on Barberton, our 34 units, I've already made multiple posts about this deal. I posted when we got it under contract. I posted when we bought it. I posted it as we're stabilizing it, as we're selling out new rents and raising the net operating income. I even posted about it when we were close on the refinance. And I said, we're close, it's gonna be cash out. I'll post more details when I have them. Well, now I have them. I know exactly how much we're cashing out. We're getting a check for $240,000. We've got a lot of money still left in reserve, so we're going to distribute $290,000 today. And I know that exact amount. And I'm going to post about that later. I haven't posted about it yet, but I'm going to post about that later. And so there's multiple opportunities in each step of the deal that you can post about something that's going on, even if you don't even have something under contract or closed yet. It's building that momentum. And then implementing the ask. So I use stories a lot, Facebook stories and Instagram stories, where if I'm telling a story about something, I'm saying, hey, do you want to talk? And I have that little yes or no bar on the bottom. Now, this is a real tactical strategy here. It's a poll. You drag the poll on there. Say, do you want to chat? Or do you want to see the pitch deck? Or are you an accredited investor? Are you interested in loaning on hard money? Et cetera, et cetera. These are really simple deals for people to understand. They understand a single family rental. They understand a flip. You bought it for X, you rehabbed it for X, you sold it for X. They understand a foreclosure flip. They understand a hard money loan. Those are really easy, simple concepts to understand. And they say yes, right? But you really don't need them to fund your flips. Maybe you've already got a good hard money lender. Maybe you've already got a couple private investors and you've got that down. And if you've got a rental home, like, what do you need them for? You've already bought the rental home, you're collecting the rent. Like, you've got to think beyond that. Okay? You're generating relationships. You're generating conversations. And this is where people are so short-sighted. They're like, when I have a deal, it's under contract, and I know the price, I know the rehab, and I know how much I need to raise, that's when I'll ask for money. But that's when it's too late. Okay? So starting to dig the well or drip the faucet to fill up the glass of water, or dig the well so you can draw on the well when you need the water being the money, obviously. You've got to start now. And so when you say, are you interested in funding my next flip? Well, if they are, that means a couple of things. One, they like you. They wouldn't have reached out if they didn't like you. They trust you. They trust that you know what you're doing, or at least they trust you enough to have a conversation. And three, they got money, right? They would not reach out to you if they didn't have 50 grand, 100 grand, whatever, to loan you for your next flip. So if you've got your flip money already lined up, you may not need them. But guess what? You've got a name, you've got an email address, you've got a phone number, you had a conversation with this person. Hey, tell me where you're at with investing. Tell me what you're looking for. What kind of returns are you looking for? What's your risk tolerance? What do you like? Have you ever thought about investing in apartments? Have you ever thought about investing in mobile home parks, investing in storage? And you can start to shift that conversation. And now you've got another lead in your database so that when you are ready, right? When you do have that deal under contract, when you're ready to pull the trigger, raise capital for your own deal or someone else's deal, you can call up, Jeffrey Smith, who reached out to you about loaning money on the flips, and he's warmed up. He's interested. We know he's got money. We know he likes you. He has a connection with you. Now you can lead that conversation towards the apartment building, towards the capital raising, and go that direction. Okay, so always try to get a conversation started there. Have an ask. And if it's a post, hey, comment below if this is intriguing to you. Comment below if you want to see my next deal. Comment below if you want to get on my investor list. People are deal junkies. They want to know. And if you can get that interaction and engagement and you have a conversation, you qualify them as a possible investor, there you go. You've got them into your ecosystem. It's all about building your tribe and building your ecosystem. So now I'm going to get into the mistake I made. I know you may be on the hook waiting, wondering what that was. So I was posting about these hard money loans. I'm a co-GP on a fund and I want to raise capital for this fund. The fund is doing the operations and placing the loans, and they've got the full underwriting staff, and I'm on the capital raising side. So I want to place investors into this fund. One, because it generates a pretty good return, 8, 9, 10%. And two, it has liquidity. So if they want to pull their money out of the fund, they can. And what that means for me is if I have an apartment deal that comes along and I want to get them to pull their 100 grand out of the fund and put it into my deal, they have the ability to do that. It's not locked up for a year, for 5 years, whatever. They can take that money out of that and go place it in my fund while keeping them in my ecosystem. Because if they're in that fund, well, now they're getting a check every month. They're getting an 8% distribution, and they're getting paid by my fund every single month. And it's just reinforcing that I do what I say I'm going to do, that we have a quality asset here. I'm getting paid over there. Well, maybe Jennings' apartment deal will be good too. I'm interested in that. Maybe they have another 100 grand. They'll leave the money in the fund and they'll put another 100 grand in my apartment deal. That would be awesome too. I don't mind. But my mistake in marketing this fund was I was putting out there, here's the house, here's the ARV, here was the loan amount, here was the leverage, and here was the timeline. So I was trying to show this is a safe, good asset. We're in first position debt. It's a short timeline. Look at the ARV, like it's 100,000. We only loaned 65,000. We weren't really exposed. The money was protected. And so yes, that's important, but it was not generating interest, because then I would say, do you want to talk? Do you want to see the deck? And I got very few responses by doing it that way. So I switched my tactic. I switched my tactic to this. I put up, here's the house. Here was the loan amount. I didn't say anything about the ARV, and I just put, here was the lender profit. So I thought, okay, it's a 2% origination fee. The interest rate's 13.75%. It was a 6-month term, and there was like a doc fee of a couple grand. So all in, they made $21,492 on this one loan over 6 months. That worked. Because then when I have the ask of, do you want to talk? Boom, boom, yes. And once people saw what's in it for them, then it became clear that they wanted to approach it. It became clear, okay, these guys are making a profit. These guys are making money. I can participate in that. I can get a share of that. They're making a lot of money, actually. Wow, look at this. They're averaging 18, 19, 20% on the money. That's pretty good. They're in first position loans. That's pretty good. That's pretty safe. I want to talk with Jennings further about that. And that's something that I think people miss. I review a lot of pitch decks. I sit in on webinars. I coach people in the deal room on how to raise capital and how to do this stuff. It's something that I see missing often is a very clear-cut, what's in it for me pitch, where people can see, if I put in $100,000, what am I going to get every month? What's going to be my total return? How quickly I'm going to get my cash back? And what can I expect? Because they really want to know that in clear, like concise manner. Like year 1, I'm getting X, year 2, I'm getting X, year 3, you're going to refi, and I'm going to get my cash back, and then I'm going to get, in year 5, you're going to sell it, and I'm going to get here, I'm going to get $20,000 there in year 5, and I know my total return on my $100,000 over 5 years is an additional $100,000. I can double my money in 5 years in this deal. That's very clear cut. They can see that on the hard money lending, that the investor made this, the lender made this. Whenever I post a foreclosure flip, I'm like, we bought it for this, we sold it for this, we netted out this. People are curious. They want to know, bottom line, how much did you make? Because that's very intriguing, and it also gives them a degree of safety of like, there's enough money in there for me to make money and for Jennings to make money, and I want to go forward with this. I want to have a conversation. So as you're talking about your wins, those are my 2 key takeaways. Find opportunities to talk about what you're doing. Use those to generate conversations that you can steer towards whatever you want, whether it be more money for your flips or more money for multifamily or self-storage, whatever it is. And then 3, show them what's in it for them. America is the land of the price tag, right? We don't really like haggling. We don't really like to go in there and beat people down. People want to know what's in it for me before they kind of have that conversation, before they commit. They don't want to get on the phone with you, find out that you're only going to pay them 2%, 3% returns, and then have wasted their time and also embarrassed, and they kind of feel weird. They don't want that. But if they go into the conversation knowing, hey, I can make 8, 9, 10%, or I can make 15%, 18%, whatever the pitch is. If they kind of know that up front, then they're gonna be like, I need to hear this out. I need to hear out this opportunity. I need to see if I like this person, see what the details of the deal are, and maybe I would invest in that. Maybe I would be interested in that, right? So key takeaways, document what you're doing and share it. Also have a call to action to connect with you, and then show them what is in it for them. If you do those 3 things, you're gonna have a lot more success in raising capital on social media. All right, guys, have a great week and unlock your life. Peace.